Bloomberg Audio Studios.
Podcasts, radio, news.
This is the Bloomberg Surveillance Podcast. Catch us live weekdays at 7 a.m. Eastern on Apple CarPlay or Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Katy Kaminski joins us. She's a chief research strategist at AlphaSimplex. Got way too many degrees from MIT to even go over. So you do all this electrical engineering stuff, operations research. What do? You go to Wall Street. I don't figure it out. But anyway, Katy, thank you so much for joining us. We always appreciate talking to you. You really give us some really great insight here. We heard from the Federal Reserve here. How are you guys approaching 2025?
Well, this is a good question because I feel like this week sentiment changed quite a bit, but it hasn't changed the long-term signals that we see. We still see positive signals for equity markets. So there's still sort of positive momentum there, especially in the US versus other regions. We've seen short positioning in yields, which is consistent with the Fed's positioning this week as well, that we might be higher for longer for some point. And we've also seen some downward pressure to mixed signals in commodities. But I think the biggest thing that shocked me this month is just the US dollar. It's the only thing that has really strongly trended despite some of the recent turbulence.
So let's unpack that a little bit. It feels like it's still a U.S. exceptionalism theme, and you kind of say that versus the rest of the world, for example. But Mary Daly, the San Francisco Fed president, just spoke on our air and said that she is not comfortable with the rate of inflation at 2.5%. That really does imply that, no joke, if inflation doesn't come down, the Fed's going to cut less, full stop. Does that change the U.S. exceptionalism feel?
It definitely could. And, when people have asked me, what are the biggest things I'm worried about this year? If you look at how markets are trading right now, they're trading with positive correlation between stocks and bonds. And that generally happens when inflation is sort of a key factor and sort of the Fed's path. And so for me, the volatility and the potential for sticky inflation or an uptick in inflation in some point in the next year, especially with current deficit levels, becomes that sort of left tail concern that a lot of people are worried about. And so I think that there's that issue, and you've seen that as well in the steepening of the yield curve. You saw that this week that people are starting to price in long-term inflation expectations and long-term rates. So I think higher rates could be a concern, and it could dampen the U.S. exceptionalism narrative.
Katy, I know you guys at AlphaSimplex, you guys do everything. You trade everything. You look at everything. How about commodities here? What's your commodities play for 2025?
Well, commodities have been difficult because what you've seen this month is that weaker economic data has put downward pressure on commodities. So you've definitely seen some negative signals, particularly post-election and even this month. But we also have seen some pockets of interesting supply demand opportunities. So take a look at coffee, which has been, a really big mover. Things like cocoa, other sort of more sort of baseline commodities, but much more esoteric that have provided interesting opportunities. So far, oil is going to be a tricky one. It's been tricky this year. And energy is going to be in the debate. So I think that's something to watch and consider for opportunities.
What's also in the debate, though, if you add to that, are the tariff discussions. And we saw in the last Trump administration what that did to corn and soybeans and wheat in terms of the trade routes in Brazil and China and the U.S. in terms of exporting and importing. Are you expecting that to occur this time around?
Definitely. And, in the last Trump presidency, we saw a lot of volatility around things like metals, particularly, and we studied this. And if you take a look at sort of tariff threats versus expectations, they can be very different. And so I think what's going to be tricky for markets is how much of those discussions actually come to fruition. And I think that's going to take time for the markets to understand sort of what of these tariffs are actually going to happen and how much of that is going to bake into prices over long term and create opportunities for positioning in things like copper, oil, et cetera, over the next year.
So I'm looking at the yield curve, Katy. I think I've got a positive yield curve. I'm not a bond person, but I see a positive steepening yield curve here. None of this inverted stuff. What does that tell you?
So usually for me, when I'm thinking about the yield curve, I'm thinking about people pricing in long-term expectations for inflation. And if you think about that, what that means is that we might have finally stabilized. We've been looking for that steeper yield curve for over a year. The beginning of 2024, that was the big call, like, oh, steeper yield curve now that we're done with the cycle. And so for me, it really represents people trying to assess what is the equilibrium point for long-term rates, but also how much do I need to worry about my long-term cash flows based on inflation as well. And so right now, I think people are weighing current deficits and concerns over inflation, and that has caused some pressure on long-term bonds and created this more classic steeper yield curve that we learn in finance degree 101.
But, I wonder if the dysfunction in D.C., particularly wrapping the debt ceiling debate into a continuing resolution or budget, is also kind of de-anchoring that back end.
Definitely. I mean, because I think when you add the volatility to inflation, it, kind of increases the ranges of outcomes. And so if there's a probability out there that we will have a lot of spending and that there could be a tumultuous path to that, that suggests that there's a lot more uncertainty around long-term bonds. And we've definitely seen that. Since 2022, we've seen increased volatility in bonds. And I'd expect this year, especially as we have those discussions, that the long-term volatility for long-term bonds will stay elevated.
All right, Katy, thank you so much for joining us. We always appreciate getting some of your time. Katy Kaminski, Chief Research Strategist at AlphaSimplex.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Next guest, here we go. Began his career as a stockbroker, listen to this firm, E.F. Hutton and Company. If you wanted to sling stock back in the day, you went to E.F. Hutton and Company. Then Bache and Company. Then Prudential Bache. Some of the best research analysts for generations came out of Bache and Company. Then he goes American Stock Exchange, Chicago Board of Options Exchange. Oh yeah, he did some duty in the U.S. Navy. Our next guest, George Ball, has seen it all. He's the chairman now of Sanders Morris. George, thank you so much for joining us. Appreciate chatting with you. It's been a pretty good year for 2024. I mean, the S&P 500 up 23%. George, a good year for you and your clients. What are you telling your clients about next year?
The interesting part about the stock markets is that most of the so-called experts, which I pretend to be and am not, spend the majority of our time talking about what was and explaining it, rather than taking the risk of talking about what is going to be. 2024 was a remarkable year, even with the declines in the last few days, in terms of equity returns. And therefore, the question is, what is going to happen and what's going to cause it next year? Two important points. One is when the Fed came out with its comparatively hawkish stance the other day, the market clearly interpreted it negatively. The Fed's not going to cut rates that much. We look at the Fed funds rate as a barometer for the market. Let's sell. That's upside down. The Fed is taking its more cautious stance in terms of future rate cuts because of a belief that the underlying economy is very strong. If the economy weren't strong, the Fed would not be comfortable mitigating the number or the size of rate cuts that are coming up. Strong economy, high earnings, that's good for the market, all other things being equal. And so you can enter at 2025 thinking, I'd rather be participating fairly fully in equities rather than being on the sidelines. Doesn't mean it's going to replicate 2024. That's not likely to happen. Secondly, there are going to be very unpredictable exogenous events. Exogenous is a big word for saying that the Trump administration, not only the president, but the senior advisors to him, are going to do things that are not predictable, aren't foreseen, and aren't conventional. And that is going to throw monkey wrenches into the marketplace and the sentiment from time to time. So you need to be aware that there's going to be difficult moments, tumultuous moments that are hard to anticipate. But in the midst of it, a economy where people working hard, a lot of people working, and earnings are apt to be pretty good. So be optimistic, but be aware of heavy seas ahead from time to time.
How defensive in that do you want to be, George?
In terms of equity exposures, not particularly defensive at all. The best mitigator of risk is cash. And going beyond cash to shorter duration fixed income securities. Therefore, I think that the smart investor, the prudent but not a craven investor, is going to hold more cash than normal, or cash-like things, as a mitigant against risk. But their equity exposures will be comparatively daring. The staples, the defensive stocks, utilities, which have some AI exposure, are probably not the right place to be. You want to be looking for the higher growth type of items, and probably continue at least something close to market weight exposure to the Magnificent Seven. So with your equity holdings, be a little bit smaller in terms of the percentage allocation to stocks, but be comparatively high risk in terms of which stocks you own.
Lisa, Alix, when I started on Wall Street in June 16th, 1986, George Ball was a leader of global Wall Street then at Prudential-based Securities, one of the greatest firms on Wall Street. George, I got to ask you.
He's really fanboying on you right now, George. I'm just going to say.
George, in 86 years of age, dude, can you give us just give us your perspective? How is global Wall Street, how has your Wall Street changed from when you were starting in the business to right now? Because you're still a leader on Wall Street. How has it changed?
To those of you who may be actually watching this on a streamed version, behind me right here is a ticker tape that a ticker that ran in the crash of '29. It's original ticker. It's got tape from that day. I'm not that old, but back in the day when I began, the people on the floor of the New York Stock Exchange were the rulers of finance. It's where big events took place. It's where the people were legends. They were towering figures. And today, the New York Stock Exchange floor is a movie set. There are no stocks traded there, but people have a lot of pancake makeup on. That's a big difference. Wall Street has spread to all corners of our nation and the world, which is good and bad. The bad part is the personal relationships between people, the non-technology driven relationships, the non-AI fabricated relationships, created trust and bonds that are much less strong and really much less confining in terms of the standards of personal behavior that existed back then. So I regret, and I think we suffer some from the impersonalization of the financial world and the financial markets. Yeah, technology lets us do things that even an old codger like me could not have believed back in, quote, the day.
George, thanks so much for joining us. Always appreciate getting the value of your perspective on these markets here. George Ball, he's the chairman of Sanders Mars. He has been on Wall Street. Don't even know when he started, but way back in the day. But again, some of the greatest firms in the history of Wall Street, George has led. So we appreciate getting his perspective here on these markets.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Bitcoin, I'm calling it out for Tom Keene because he is obviously a huge fan of the cryptocurrencies. It was 107,000, just like a cup of coffee ago, as Tom Keene would say. Here we are at 92,000. To me, I view this. I'm just my personal view. I view it as a commodity.
Okay.
gold. It's just supply and demand. That's what, to me, that's how I view it.
So is that a safe haven call then?
I
we don't know.
I don't know.
Okay.
It's oil, it's gold. I don't know. But our next guest is a professional on this stuff, Ayesha Kiani. She's the COO of MNNC Group. I'm not sure what they do, but that sounds good. Ayesha, can you talk to us about how we should think about crypto in general? How do you think about it?
How do I think about it? I mean, I put it on a pedestal because we are a hedge fund that trades it.
Okay.
So that's what we do.
Yep.
We make liquid markets for it. The second time I was on this show, I called Bitcoin at 100,000.
Did you?
Yeah. And Tom laughed at me.
Victory lap. We
Yes,
like that. Go
victory
ahead.
lap.
Yeah, Tom laughed at me. He was like, no. You're a professor. Like, shouldn't
Right.
you be serious? And I said, no, I'm very serious because we see it at that value. And this is before even the election, right?
Okay.
Before the election result. Yes, we view it as a commodity.
Okay.
It is setting, a groundwork for digital assets. And I think that, that's where the economies, that's where the technology is headed anyways, right? Like more faster, processes to exchange money, more faster processes for cross-border payments. And the technology behind Bitcoin sets that. But there's like a lot of groundwork being done. The only reason we've seen that kind of price action just recently is because the upcoming administration is pro-crypto. So that's why the markets rallied.
So MNNC Group is a quantitative digital asset investment firm. So it's not just Bitcoin. It's digital assets, which is a huge step in technological advancements. I get that. So how do you look at an asset that's crypto related and then you got like Fartcoin? You know what I mean? Like, how do you distinguish these two things? Good morning.
I love your knowledge on it. I love it. Fantastic. So Fartcoin is a meme coin.
Yeah, it's a thing.
Is this Howard Stern?
No. This is Bloomberg Surveillance Radio at 7:20 on a Friday.
Okay.
And I have to go and teach my kids at NYU after this. So imagine if like any one of them ended up catching this on TV. But meme coin, right? Even though these are just useless tokens that are being traded in the liquid markets, in my very personal opinion, and I talk about this like in my class, look, guys, these tokens are literally putting blockchains to work, right? So if this token is based on Solana or if this token is based on Coinbase's base, that is just making sure that the blockchain actually works for that kind of fast buy and sell transaction. That's the use. I mean, that's just like kind of testing the technology if it works or not. But yes, does Fartcoin has an underlying value? Absolutely no. Does it make sense to exist? Absolutely no. But it is actually just showing everyone that, look, we can create assets on a very decentralized market.
You're also, Ayesha, adjunct professor of blockchain and distributed ledger tech at NYU. Somebody actually created that title?
Yes.
That is awesome.
I was thinking the same thing.
That
I was
is
like,
awesome.
wow, okay.
I mean, and again, it has to be at NYU in my sense, because they kind of cover everything that's cutting edge there, in my opinion. What do you think about this new administration? What does it mean for crypto in general? Because my thought is, I'm not sure this president would know a cryptocurrency if he tripped over it, but that's probably true for everybody out there in the world. Yeah. There's a select few that really understand what's going on out there. But what do you think this administration means for crypto technology, maybe from a regulatory perspective? Or just...
From regulatory perspective, yes, right? Like change of administration, change of SEC, change of CFTC, just more understanding, how digital currency works. That's number one fact. Even Department of Treasury is pro-crypto. And when we say pro-crypto, it's just that they understand what digital assets are, right? And then, same thing with the upcoming president. He may not know, but his sons do, right? And then every now and then we hear something, oh, Barron taught me this, or Eric taught me that. And we've seen Eric, at a couple of, blockchain conferences.
Okay.
So I think that's where the word, I guess, is coming from.
Okay, distinguish for viewers like myself the distinction that we make between a digital token and then blockchain, and then what the importance is to make sure that blockchain works.
Fartcoin is testing that, right?
Right, but what does that mean?
That basically means that you can use a blockchain, which is a decentralized ledger where you and I transact, and then, Paul gets to see it, right? And that's to make sure that the blockchain is working, the technology is working. And we need the technology because why? Because it's open source. Everyone can see the two people transacting, and everyone can see, who's sending who, and then faster. The reason it's faster, it's like super quick, like a couple of seconds for instant settlement and finalization of that settlement, right? Like, I cannot ask you for your money back once I've sent that to you. He would like to see that, and that's what the open source technology, the open source distributed ledger shows.
ETFs have been a major story for crypto and Bitcoin in particular. What does it mean to you? How do you guys use Bitcoin ETFs?
We don't.
You don't? Okay.
We don't. It's mainly an institutional product for investors who would like access to Bitcoin but don't want to actually touch the Bitcoin or Ethereum. It's an institutional product for them.
So how do you guys, you trade in straight?
We trade straight Bitcoin and straight Ethereum and straight other coins.
Who's been buying the Bitcoin? Was it MicroStrategy?
MicroStrategy.
Yeah, MicroStrategy, yeah.
What's up with that? I mean, he went from his $25 million to, I think, like 25 billion at this point. He just kept buying Bitcoin and Bitcoin and Bitcoin, and he's about to get listed on NASDAQ, I think December 21st. And his largest holding is Bitcoin. He's one of the largest holder, if not the largest holder of Bitcoin.
Is that a good thing?
It's a very interesting thing, absolutely, right?
It is a thing, I guess.
It is a thing,
right?
It is a thing, yeah.
I mean, I guess, though, I guess I just wonder if it perpetuates fraud on blockchain, does that happen a lot? Because that is a risk too, right?
That is absolutely a risk. We've seen like companies emerge, like chain analysis, TRM labs, that kind of prevent it or that kind of trace it. It has gotten better over the years. You can easily trace a transaction that is fraudulent. Very much less on Bitcoin or Ethereum, but we have solutions.
Ayesha Kiani, COO of MNNC Group, also adjunct professor of blockchain and distributed ledger tech at New York University, NYU.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.
All right, folks, your daily look at the front pages around the world. Lisa, Mateo, what do you have for us today with newspapers?
Well, it's probably not going to be much for you, but more for Alix.
Yep. I feel this coming.
She feels it coming. Okay, new hair color, yay. It's called recession blonde or maybe mouse brown. Hairstylists say that their clients are a little bit budget conscious, so they're asking for a new color that it's a little bit more low maintenance, because it spends a lot of time and money. Blonde hair highlights. I know it. I've tried it. Okay, it takes a while. Sometimes you can sit there for hours. You can pay up to $400 a visit. And celebrities like Taylor Swift, you see her hair change.
Yeah,
like she went from the blonde, bleach blonde, and now it's like, toned it down a little bit.
This is my life too. This is my trajectory with hair color and Taylor Swift are very similar. Because basically if you see any blonde over the age of 30, like that there's color in that hair.
Correct.
Yeah. So like a lot of my hair color is natural and I do the highlights. I'm like in and out in 20 minutes.
Because you're short hair.
Well, yeah, but even if I wasn't, I mean, the stylist just paints the highlights on, and then we're done. Like 20 minutes in the little heating thing, and we're out of here. Versus like when I used to go more like platinum.
I see.
It was a lot more labor intensive and a lot more expensive. So I feel this. We're going for contrast, with contrast color in the hair.
I like it.
Paul,
it works
your
for
thoughts?
both of you guys. Natural gray, it works. I work hard on this, but
actually, my mom has amazing platinum hair.
So does my mom.
She doesn't dye it. It's just like her natural hair. So I'm like, let's go. Yes. Like when that moment happens, we're gonna be all in on that.
But it's expensive for you guys.
It is.
It is. Yeah.
It's very expensive, and it's often like sometimes you have to do it.
What did
like
you
how
do
many
during
every
the
4
pandemic?
months or so? During the pandemic, I did my own. I did the box.
I was very much a mouse brown brunette
You were, see?
with some actually No, I think I went in pretty early because I was back on TV in like June of 2020.
Right.
So I think that they opened the salon and it was just like, everyone's masked up.
I was at like CVS, Walgreens, get in the box. That's what I was doing. All right, so the next one. The chief executive of Toys R Us Asia, separate from the U.S. parent company, tells the Financial Times it's looking beyond kid toys this holiday. It's moving to kidults. So that's because, falling birth rates in Asia, right? So they're focused on the Gen Z kidults, which is people in their like early 20s to late 20s, that kind of group. Their spending counts for about 1/8 of the company's revenue, but sales are growing fast in China and Japan. So how they're doing it? Well, one thing, Hello Kitty, right? Big thing for women too. So they're trying to attract that crowd. They go to cultural trends like gamers. Genshin Impact. I don't know. That's a thing? Is that do I say it right? Aren't you the gamer expert? Genshin Impact. And also like Hollywood movies that are coming out. So this is the shift they're doing. So because they don't have as many kids in Asia. So now they have to switch to
birth rates
adults.
are down. It seems like I hear the story everywhere.
Yeah, they're down in Asia.
What up to the Irish Catholic family when you get like 8, 10 kids? That's not happening.
Higher education.
Yeah.
That's what happens.
Well, exactly.
I'm not putting like that many kids through college.
Exactly.
You crazy?
You're exactly.
I like toys, but like I don't need like a Hello Kitty thing.
Would you do the Hello Kitty? Yeah,
no,
I know.
board games. I would do board games.
Okay.
No, I'm not a board
But
game
other
person.
than that, I don't know. I'm not clutter. I don't like clutter. Don't let my desk here fool you. I don't like clutter. I don't like stuff. Just
me
ask
neither,
my husband.
Me neither. I'm at this stage of my life. I'm just getting rid of
Yes.
stuff.
Doesn't that feel so
Downsizing.
good?
I always do
it's
that.
a good thing.
Throw
love
stuff
it.
out.
Yep.
Okay.
Next up.
This one, Wall Street Journal, the James Bond battle. Okay, so here's the backstory. Okay, 3 years ago, Amazon required the rights to release Bond movies through when it purchased MGM. But the relationship between the family that oversees the Bond franchise and Amazon is pretty much falling apart. So with that new hope of a new Bond film is kind of in jeopardy. You haven't seen one in a while, because at the time the MGM sale, the Bond franchise represented the significant share of the $6.5 billion company that it paid for the studio. So the person who holds the power, her name is Barbara Broccoli, actually.
Yep.
She inherited from her father. So she's told friends that she doesn't really trust Amazon. So I don't know if James Bond, it's kind of in jeopardy now. I don't know.
Yeah,
what's
you're
gonna
right. We
happen
haven't
with it.
seen one in a while, have we?
I mean, like,
No.
I think I'm okay.
I'm
with
okay.
That, though.
Yeah, I'm kind of over it, but
I mean, Daniel Craig was so awesome
Yes.
as the last Bond, and the whole pained, like,
Yep.
spy thing. Like, I don't know. Like, I don't need another Superman movie either. Like, I'm good. Like, we can dial that back.
But they
a little
need
bit.
to make money because
Yeah,
they
'cause
invested
Well, they need
so
to make
much when
money.
they bought it.
That's
and,
true.
And that's the issue.
He was. Daniel Craig was a really good Bond.
He was
such
he
a
was very
good
good.
Bond.
Yeah.
I mean, I grew up. My Bond was really. I guess Roger Moore was my when I was growing up. I caught the tail end of
Sean Connery.
Sean Connery. Yeah.
Correct.
So-
No Pierce Brosnan takers, no?
Mine was Pierce Brosnan. That was my Bond growing
Okay,
up.
okay,
Such
okay.
nice hair.
Yes, yeah.
I did enjoy that, but that was more like cheesy fun, which incidentally is very much my jam when it comes to movies, cheesy fun. But Daniel Craig really took it to the next
His
level.
Skyfall coming out that came out in 2012 made 1.1 billion
Wow, see?
globally.
Okay.
So yeah, he made a ton of money for that. So, but if you're MGM, that effectively was the asset value of that company.
Of course, yeah.
And that's what I forgot Amazon bought them. So yeah.
So wait, so are they trying to do an Amazon like James Bond TV show? Because I would super be down with that.
I don't know.
We don't know.
It's probably just any franchise. They need the green light from
Yep.
Barbara Broccoli.
Yep.
Oh, and here's some of the questions in the journal article. What about a Moneypenny spinoff?
Oh.
Or TV spinoff with a female 007? But I
See,
feel like
so
people
those
would go
all require
nuts if that
permission.
happened.
Yep.
That's a big moneymaker. Have you guys ever been to the Soho House in the city?
Are you
No.
kidding? No.
No, I've been.
You've been.
How have I gone?
been.
And you-
Lisa Mateo's
Whole
been there.
Sweeney has not been to the Soho
No,
House.
that's a great point.
What has happened in this world?
Exactly.
Okay, so it's this exclusive members-only social club, right? 45 Club, more than 250,000 members. Annual membership, $5,200 if you have to be 27 and over. They received apparently nearly $2 billion takeover, a new third-party consortium. That's all they said. They didn't give a name or the parties involved. And they said the takeover backed by billionaire chairman Ron Burkle.
Burkle, yeah.
But 3/4 of Soho House's common stock is owned by the company's board, its affiliates. So the shares really actually took a tumble. Yesterday they were down 47%. Now they're down about 3%. But this is the thing. It's really been struggling with profitability. You've heard Soho House in the headlines all because of that, because they're just struggling to make some money, especially during COVID really hurt them too.
Yep.
But yeah.
An annual membership to all of Soho House's clubs costs $5,200 for those age 27 and above.
No.
But in New York City, there are so many good, really old, high-quality clubs to join. And then there are a handful of newer clubs, like the Core Club, for example, which is also very good. I don't know where Soho House fits in. I mean,
no, Soho House is huge.
Is it?
Yeah.
Yes.
Like you walk in and you
For the
feel
young
very
crowd,
special.
yeah,
Like
no,
they
it's a
have
really
your
big
name
deal.
on a list. And
There's
you
no
gotta go up-
stuffiness.
No.
It's a whole.
Well, I like stuff.
You like stuffy. You
They have
know.
the pool upstairs.
The pool is huge. Yeah.
All right, Lisa Mateo, thank you very much. That's the newspapers with Lisa Mateo.
This is the Bloomberg Surveillance Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday 7 to 10 a.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.